Okay, it's 17th of December. We've got about 25 minutes to the NY Open. We'll get to the charts in a second. Um, yeah, just everything sounds good. Yeah. Okay, just a second. Yeah. Okay. Yes, today we've got. Let's look at news before we look at a higher time frame this week. Right. So today we have retail sales in about 55 minutes from now. So until retail sales, I'm not going to be taking any trades. Okay, so that's about 55 minutes from now, retail sales news. We're going to wait for that. Now, usually it doesn't do much to price. You might have a bit of volume that comes in. These are the only two news events for the week, retail sales and the interest rates decision tomorrow, right? NY time tomorrow for me, it's on Thursday, but it's during NY. It's during the NY session tomorrow, the latter half of the NY session tomorrow. Um, those are the only two news events for this week that might have volume. The rest does not, right? Um, yeah. So today we have retail sales. So because we have news, I'm not going to be taking any trades uh, until news. Okay. So we've got about 54 minutes until then to do our analysis. All right, let's look at the daily chart. Just a second here. Okay, let's look at the daily chart. So we had a doji. We spoke about this yesterday. The first 30 minutes of the session, that's around 7:30 a.m. EST. Sorry, around 7:30 a.m. EST to around 8 a.m. EST is when I do my prep work or the analysis for the session. I trade the first 2 hours, 2.5 hours of the NY session, 2 to 2.5 hours at the most. Um, and I did say this that we might close a doji, and we have closed a doji just above 2650, right? So that's a doji candle. That's really not saying much, but price is pushing down. Now we've come to this ugly area where we ranged for 2 weeks, right? It's from the 26th of September, 26th of November until around the until the breaker under the 9th of December. We just ranged here, right? That's 2 weeks. Price is back there, right? It moved up, came down, and now we're back there, right? So are we going to start ranging again here until FOMC tomorrow, or are we going to break out today, right? Very likely that we range. We continue to range, and tomorrow, the latter half of the New York session, we might have a breakout. That's very likely, right? But this area um, is a very ugly range on the daily time frame and even on the 4 hour, right? So we are back there right in the middle between 2650 and 2633. I hate these kind of price action because you're really not doing much. You're just waiting for price to come to your zones. Okay, so we are probably heading towards 2633. That could happen today. We've got about 100 pips left to get to 2633, and that's probably what's going to happen today in the first couple of hours of the New York session. So let's go to our trading chart. Just a second. Before we draw zones, I always do a recap of what happened the previous day. So I had missed this zone to draw this 1 hour supply. Okay, let me just go back. Where are we? Okay, so I had drawn the 4-hour. I made a bit of a mistake yesterday. So yesterday I had marked this candle. If you watch the first 30 minutes of yesterday's stream, I'd marked a drop, single basin candle, and a drop. This candle was marked as supply. Then I readjusted it. When I readjusted it, I accidentally drew it above this 1-hour zone. I missed to see this, right? So on the 1-hour time frame, that 1-hour supply zone is inside that 4-hour supply zone. So these three candles, drop, base, and drop, these three basin candles, if I highlight this green area right here, this green line, 2660, and if I go to the 4-hour time frame, you'll see that that 2660 is right at the base of that basing candle, right at the close of that basing candle. There's a 1-hour supply zone, so I had readjusted it and drawn it higher instead of drawing it on that candle. I drew it correctly initially, and then I readjusted it. That's what happened, right? So what happened was price came to that 1-hour supply, right? We came to that 1-hour supply. It did drop from there. So that inside that, let's just unselect this. There is this candle right here on the 30-minute. Yeah, this is the liquidity candle in that zone, right? This 30-minute candle is the liquidity candle. That's a 61 pip candle. That's a liquidity candle, and price respected that high, right? Because you can see price came in, respected the high, didn't break that high right there. The high of this candle is 2665.88. It didn't break that high, respected it, and on the 15-minute, that's that candle that's marked there on the 30-minute. On the 15-minute, we had a rejection here, right? So I ended the stream, I think when at the close of this candle, I had taken buys here because I had not seen that supply zone. I had taken a buy here. But after the stream was over, once I saw this candle, I closed my trades. I had my stop, I think my stop was there, I think, under that. So it did hit my stop loss. And then I saw this candle close. And then I realized that I had drawn it incorrectly, and I quickly drew that. And then I saw that there was a M15 liquidity grab from that area. And when price pulled back to 2660, I did take an entry, right? 2660 is the base of that 1-hour supply zone, right? I did take an entry there, and I said that price would come to this candle right here. There is a 5-minute candle here, this 5-minute candle right here. I said price would come to that. So 2651 was my TP, and price did come there from, so my stop was just above that candle, above 2663. That was a 30 pip stop loss, and it came there. That was a 90 pip trade. So that was a 3 RR trade, 1 to 3 RR trade, right? That was a trade I took. And then we pushed back up, and we did come eventually. We did come here, and we've come further down now, right? And we've come to this high liquidity zone, the next green one, which is here, that we had identified here, right? There's a 15-minute zone there. Now, I'm going to get rid of all of these. I will start this process again. Got plenty of time, so there's no rush at all. And to the 2633 is here. This is the weekly support, 2633. That's probably where we're heading today. There is about 100 pips to get there. Okay, so Let's get rid of these as well. Start with a clean chart. All right, let's start with supply. So that's a clean area of about a 350 pip range. We can draw supply levels inside that, supply and demand levels inside this, okay? For the New York session, for the first 2 to 3 hours of the New York session. Let's get rid of this also. Okay, better. All right, cleaner. Now, supply. All of this supply. All of that. Right? That's a lot of range in, but that's all supply. This is the breakout. From 2650, this is the breakout. So we're going to cover that entire area. Right? There's just a second. There's a drop, base, drop here. That's a drop. Then there's a drop. Interesting. It's a drop, base, rally here. There's a drop. It's a basing candle. Okay, I'm going to draw it like that. So that's a drop, base, and a drop, and then a base. All of that's a base. From that drop, all of these are base, and that's another drop, right? Drop, base, and drop. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 candles in that base. Yeah, that's better. Okay, so let's put the numbers here. This close is 880. This close 893. Yeah, high 442. 302, 030. 442. Okay, that's the closest supply, right? There's a supply zone here, there's a supply zone here. This is what's left of this basing candle because prices come back up here. So that's what's left of it. So that is 269 pips away. Let's extend this also to the right. Okay, and then there's a basing candle inside. There's a high liquidity candle inside that. Let's extend that area also to the right. Move this label across here. Okay, good. So now we have supply levels for the New York session. Let's look now for demand zone. So we've got this rally and this base and this gap up here. So this is a rally. That's a rally. 4 base-in candles, and there is a gap here. So when Monday opened on the 9th, price gapped up. So that's like a bullish. That's 140 pip gap, right? So it's as if it's like having a 140 pip bull candle there, right? It's an invisible candle. That's why it's called a gap. That's the move up, right? So you have a rally, you have 4 base-in candles, and you have this rally here. But the rally is a gap because price closed here and opened up here, right? And then you have with with that invisible candle, that rally, you have 2 other base-in candles and a rally. So rally, base, rally, right? But price has come down here. Okay, so the open of this is 39.35, 39.35. This low is 412. Okay, okay, good. Let's extend this to the right as well. So this demand here is what's left of this demand zone. Drop 2 base-in candles and a rally. Prices come down deep into it, so this is what's left of this demand zone, right? Of this drop, 2 base-in candles and a rally, this is what's left of it, because the next candle has come back in. Okay, so I think that should be good for today. It's 270. It should just extend this as well. And then we have this bit. This is a drop and a base and a rally there. That's a rally, 3 base-in candles, and this is what's left of it because prices come deep into it. Okay, and that's good enough, right? That's good enough for the NY session for the first 3 hours of the NY session. So we got 300 and we got we've covered an area of about 330, 350 pips to the downside, and about 300 pips to the upside, which is great. Okay. Now, next step is to identify which of these new supply demand zones that we've drawn are high liquidity zones and which are not. Okay, so high liquidity zone is a zone that has taken out an opposite or opposing demand zone. A high liquidity supply zone is a zone that has taken out an opposing demand zone. That's what it is. Just a second. Okay, so has this supply taken out demand to the left? Go down to 1 hour. Might be better. Okay, so we have, no, not that one. No. Okay, so we have a 1 hour demand level here, right? You have a drop, 3 base-in candles and a rally. So all of that is demand. That's the base. That's a 75 pip base. And this move down took out that low, making this a high liquidity zone, right? So we bring that down here. And is this a high liquidity zone? Has this supply taken out anything to the left? We have this demand here to the left, a drop, 2 base-in candles and a rally, and that low there was taken out by this move down, making this a high liquidity zone as well, right? So those are 2 high liquidity zones above current price. Is this, now we look at demand, has this taken out any supply to the left? This move up, this one, yeah, it has. So there is supply here. I think even on the 4, this is a very ugly area which we looked at the last couple of weeks. But this move up took out this, there is 1 hour supply here. And this move up took that out. So if I just put let me just mark that with a line there. Go down to the 1 hour. So we have a rally and some sort of a base there and a drop. That's why that base was retested and it came down, and this move up took out that base, right? Making this a high liquidity zone. We also have weekly support running right through it. So that's another reason why it's a high liquidity zone. So we're gonna move this label up here, okay? And then the one at the bottom isn't, I think. Yeah, there's nothing here to hold price up. This hasn't taken out anything because prices yeah. So that's a 207 pip zone. Prices come 122 pips into it, more than 50% of the way. So this no longer is a high liquidity zone, right? It's just a wick there. And if you go down to the 1 hour, if you go down to the 1 hour, let's get rid of this. Yeah, this hasn't, yeah, this zone has been tapped into. So that's not a high liquidity zone anymore. Okay, so we are covered, right? I don't think price is going to come all the way down here in the next couple of hours. 500 pips, no, that's not going to happen. Anyway, so we've got a supply zones marked out for the NY session. We've got a demand zone marked out for the NY session, and we've got our high liquidity zones marked out. Okay, let's just clean this up a bit. Okay, perfect. Save this. Okay, so we are anticipating a move down. Now, anyway, now the next thing to do is, since price is already in demand and we got weekly support right here, 2633, is there, this zone is 150 pip zone, right? That's a rally, 4 basin candles, 1, 2, 3, 4, and the invisible candle up, right? The gap. Is there a candle that can push price back up here? Is there a high liquidity candle in here? Because since we are already very close to demand, that's the first thing that we want to check, right? Is there a high liquidity candle in this H4 high liquidity zone that can push price back up? So we need to go to the 1 hour time frame first and see if there is a candle that stands out. Okay, there's a wick here. There's a liquidity grab here, 114 pip liquidity grab. Let's just mark that out. That's the first thing that stands out. Okay, go down to the 30-minute time frame. And this candle is still a 100 pip candle. Yeah, it's a 102 pip candle. It's still the largest candle in that zone, except for this one right here. It's a 132 pip candle, also in that zone. Yeah, okay. Let's go down to the 15-minute time frame. It's 101. Interesting. We'd have to go with the 30-minute time frame. Let's go down to the 5-minute. 50 pips. This candle right here. This candle right here, 50 pip candle. It's 40. Okay, I think the 30-minute covers that candle. Yeah, let's use this candle. 36,589. 36,589. Okay, has price already touched it? Not yet. Okay, this low is 36.20. This is 36. Price hasn't touched that area yet. Is it reacting off something else? There is this. Yeah, this is the only candle that I can think of. 100 pip candle. This 5-minute falls inside that 50 pip candle. Yeah, I think this is the candle. This is the only candle. Yeah, it covers that wick, liquidity wick, right? So price touched it, failed to get back in, pushed all the way up, pushed 890 pips up. Okay, so we are anticipating some sort of a move up. Okay, so I'm back. Yeah. Okay, so the last time price came here, it created that liquidity candle. We pushed up about 880 pips, right? 890 pips. So we can anticipate some sort of a push up from here, at least to 2650, right? Now, yes, the move is down. We are very bearish at the moment, but this is a liquidity candle. This 30-minute candle that we marked here, there's a 30-minute candle right here that we marked, right? That's a liquidity candle from this high liquidity zone that could push price up. Price hasn't touched it yet. Okay, so I'm anticipating a move down to touch this area and then probably a push up. But having said that, price is very bearish at the moment. We are below the EMAs. We're below the EMAs, so we are bearish. So if we do push up into this high liquidity H4 supply zone, where can price push back down? 2650 is a good area for that to happen. Let's also look for a high liquidity candle inside this, right? So on the 1 hour, this candle stands out. 88 pip candle. Yeah. There's 88 pip candle right here. Let's go down to the 30-minute. On the 30-minute, 61 pips, 59 pips. $64. Yeah. Probably this one right here. 61, 57. 62. Let's look at the 15-minute. It's nothing on the 15. It's 44. It's 34. No, there's nothing on the 15. It's the 30-minute candle. Yeah, it's this candle right here. But it's tapped it today already in the London session. We've touched it and we've dropped. So we do not, price doesn't need to touch it again. It could just reverse at 2650. That's possible. So it's 70 pips. $62. Yeah. Yeah. Okay. So this candle, 304685. 304685. Okay. So that area has been tapped to the pip perfectly, that candle, and we dropped 200, over 200 pips, right there. This is the London high. Okay. Now it does not need to come back there again. It can, but it doesn't need to because it's already grabbed liquidity from that candle. So it can reverse at 2650, this candle right here. We can have a tap there to 2650 or this candle anywhere, even to this candle, even to the low of this candle right here, and then reverse, right? Back to this is the liquidity area, 2636, right? That is the first area where if I am taking sells, if I do get sells from above here, that's probably my TP level, 2636. And then if you break that, we can come down to 2633 today, right? That's just about 30 pips away. Yeah, so that's the idea, all right? So let's see, we've got about 25 minutes to news, 22 minutes to news. We're going to wait for retail sales news, and then now that we've identified these areas, price is bearish, so I am looking for sells, and I know where price could come to, which is 2636. That's where price could come to, 2636, and then 2633. I know where price could possibly reverse at, 2650, or at this candle. So anywhere inside this candle, this 68 pip candle right here, it's just the only issue with this candle is this candle has no top wick. This candle has no top wick. Let's look at the 15-minute time frame. How wide is this zone? It's 150 pips. That's 34 pips. That's 49 pips. So it's not that. It's outside the zone. Yeah, it's this candle. So price can reverse anywhere inside this candle, and it's at 2650, right? So I need to see an M15 rejection coming down. If I do see, stop loss would be above that candle high to come down, right? If I do get M15 rejection here, I want to see M15 rejection to take price coming down to 2636. That's about 125, 140 pip move down, and the stop loss for that sell would be above this candle. If we break this high, then we're coming to this area, right? Then again, same thing. I want to see a rejection. I want to see M15 rejection from this area to come down, okay? But if we come down, if we go up here, then we may not come down because we've got 2650 here to stop price. So it might be a very small TP, just about a 60, 70 pip TP to come down here, 2650. So ideally, I don't want price to close above 2650 and break this high. I don't want to see price do that, because if it does that, it's very likely that we are going to head up for the rest of the session, and we may, even if you do have a pullback, it might be a very short-lived pullback just to 2650 and then a continuation up, right? I want price to stay below 2650 to see price come down to 2636 and 2633. That's the idea. I want to see price stay below 2650, right around this candle, to come down to 2636 and 2633. That's the idea, right? If and once we do come here, if we still have enough volume for the day, we could grab liquidity and push back up again from here, 2633, right? Because as I said at the beginning, look what happened the last time. Price hit 2633, right? We've pushed up about 900 pips, right? 925 pips from 2633, and from this 30-minute liquidity candle that I just marked here, right? So it's very possible that price comes down, grabs liquidity, and heads back up to 2650. Both those scenarios are possible. I trade at the extremes, so I'm waiting for a trade up here or a trade down here. I'm not in the middle. I'm not looking to trade here, in the middle here, right? So either at this candle around 2650 or down here for buys. Sells somewhere here, 2650 or this candle. Um, Maybe not higher. I don't like to see price come higher because then we've crossed 2650. I hope that doesn't happen. I hope we just come here, retest, continue down, and then maybe later on in the NY session buys at the after about 3-4 hours of the after NY open, buys to go back up. Right? That's the idea. Um, okay. That's enough. That's my rant. That's my rant for pre-NY. I mean, for the prep work for the NY session. Sorry, not pre-NY, for the NY Open. And now we wait. We've got about 18 minutes to news. We wait. Wait for news. Just a second. Yeah. Okay. I don't. If you do have any questions on what these lines are, how these appear, these M30 resistance, automatic M30 support appears, and all of that. I don't promote anything here, but that's an indicator that I use. The link to all the information on that indicator is in the description of the YouTube video. It's called price action entry alerts, right? It's a very comprehensive indicator that has a lot of price action tools in it in one indicator. It helps me make, well thought of decisions of where price could go next. So it's just a guide basically. It's like having training wheels. It just tells you where price could possibly go, because the main areas that I look for a setup, and I say this at every session, every stream, the main areas I look for to take trades up from H4 or H1 supply demand zones, like these dark red areas or these dark green areas, right? Those are supply demand zones. I call them SDC, supply demand zones. Okay, that's one. That's one area. So inside that area, you'll find a liquidity candle. So ideally, it's from the liquidity candle in that zone. That's one. The second area is these psychological round numbers: 2650, to 600, to 700, to 600, to 650. These psychological numbers, to 750, to 800. These psychological round numbers. And the third area is weekly support resistance levels. So I always start with this chart. This is the daily time frame. These are weekly support resistance levels, and I've had these levels drawn out for months, literally for months, right? These levels are drawn out for months. For months, I mean, I've had these, I think, for more than months, probably for a year or longer than that, right? Or probably even longer. I've been trading Go for a long time. So these lines, They may move up by a couple of pips up or down, but these are the key weekly support resistance levels. There are a lot of them, right? So these levels have been there for a very, very long time. You can always take a screenshot and have these levels and watch how, however you trade, just watch how price reacts to these levels when price gets there, right? Um, Now, so that's the third one. And then the fourth is pullbacks, a pullback to the EMAs, right? So again, these are the EMAs that I use. This is on these EMAs are on the 30-minute time frame, and this is a 30 period moving average, 30 period exponential moving average, and this is a 60 period exponential moving average, but it's on the 30-minute time frame. So even if I go down to the 15-minute, it still shows it's still off the 30-minute time frame. So even if I go down to the 5-minute, it's still off the 30-minute time frame, right? So that's the next area where I take pullbacks. So I can see here how price pulled back to it perfectly for the London session and then rejected. You get that rejection there, the rejection, and then price dropped like over 200 pips, right? So the pullbacks too, that's the fourth one. And the fifth one is the crossover, when these EMAs, they cross each other. So like here, you can see a cross here, right? It doesn't happen every day, but when price does cross, and if the candles are in this area, then I would take a trade there, depending on if price has crossed it or it hasn't. It doesn't happen often. That's why it's number 5 on my list. But it does happen sometimes. You can see how price crossed above, and if that candle falls within my session, within the New York session, then I would trade that candle, right? But those EMA crosses are not very important, right? They're not very important because then that's why they're number 5 on my list. Sorry. So the first 4 that I mentioned are the most important areas where I look to take trade entries. The first 4 that I mentioned. The last one is not very important. The EMA crosses is not very important. Um, okay, so now we're waiting. We've got another 12 minutes to news. Spreads are quite high. I said this yesterday as well. I really don't like this. I don't like trading when spreads are high. On IC markets, the broker that I use, spreads are around for gold 0.4 pips or zero point 0.5 pips at the most. Uh, these spreads are very high. Now, I don't know if IC markets has a problem with their liquidity, or if it's the last week before Christmas, so if spreads are high because of the lack of liquidity, right? I don't know what's the reason. I don't know if it's an IC markets issue or if it's just a market issue where there is a lack of liquidity and spreads are high, therefore. Um, okay, so yeah, so this will also be the last week that I trade. Back again around probably the 6th of January or the week after that. 6th is a Monday. I might be back on the 6th or the 13th, right? We'll have to look at the calendar, news calendar, and see. Just a second. We have to look at the news calendar and see what's happening on the 6th. Let's go to next week. Next week. January. Yeah, yeah, 6th might be a good week to trade because the week of the 6th, the week of the 6th is NFP on Friday, right? So that might be a good week to trade. So we might probably start on maybe the 7th, not on the 6th. 6th is a Monday, usually low volume. So I'll probably start streaming again on the 7th, Tuesday, right? 7 to the 10th. That'll probably be when I'm going to start streaming again, and I'll start trading again as well on the 7th, Jan 7th, starting from the 7th of Jan. Okay, got about 10 minutes to news. Let's see what's happened so far. Price has broken this high. This is 14. Broken this high. Price has broken this high. Did we touch here? Low 692. High 689. Not yet. It's 49 pips. 376692. Okay. Waiting. On M30, we have formed resistance. There's newly formed resistance right here, right? Right here. We might have a push up. It's very possible the price pushes up. It doesn't need to, but it could push up, create resistance again, M30, and then come down. I would like to see price tap the EMA, this candle here, or the EMA or 2650, one of those three. Either the low of the candle or the EMA or 2650, or even this EMA, the slow moving average here, and then push down. But price can do whatever it wants to do. But that's what I would love to see. Price come up and then push down. There's a supply level right here on the 15-minute. If you do take that supply level, price does touch that, you can have a stop above this candle right here, this 15-minute candle right here, this high. Right above that candle, above 2652, 2659.93, so it's 2652, and anticipate price to drop here. So 120 pip drop. Just give me a second. we're bearish, so I'm not going to attempt any buys here in the middle. Right, even if price is going to push up, I'm not going to attempt any buys here. For me, buys are from this liquidity candle, 2633 or this 2636. That's the areas for buys to me, right? That's where I want to see if I get a rejection here or M30 support form here and a M15 um, rejection of this 2633 or 2636. That's when I would want to take buys, but not in the middle here, right? We are very bearish, so no buys here. It doesn't matter even if price pushes up here all the way, no buys for me here. This is the area for buys down here at the extremes of this range. This is the area, not here. 4 minutes to news. I'll be back in a couple of minutes. Second. Okay, we are pushing down. A couple of minutes to go. We are pushing down from here. We are pushing down from here. 689, 262, 6, 262. 64 pips, 2638. We're going to drop here. We're going to go higher. We have two M15 highs broken. This one broke this high. This candle broke this high. That's a liquidity grab, but it didn't touch this candle. I'm going to take a sell here. I'm going to take a sell, stop loss above here. Anticipating a move down here. Sell here, stop loss above this candle. Anticipating a move down here. Let's see. If you push up, I'll close it. '89, '89, so this wick here should, prices to come down, this wick should push, hold price and not break. Once you break this wick, that means we're going higher. Should push price down to here, 2636. This would have been a better entry if I placed pending here. Let's see. So the idea is for price to come to 2636, right? That's the idea. Stop loss above this candle here, price to come down. But we do have a problem here. We have some sort of demand here. The price needs to get through first. So it has to come, then we have demand right here. So we have a demand level right here. This might break. Yeah, this should break. But this level is, price is going to struggle here. So it might break, it might come to 2638, close below, then push back up, and then head down. But the idea is still what I had from the beginning. 2636 is the area. If you get past 2636, then 2633. And if this trade works out, anyway, I'm not going to be taking another trade. It's just probably just one trade today. And then if you do come down here, then that's it. That'll be the trade. Okay, so the reason for taking this, I mean, I explained it in the first 30 minutes of the stream. Price is bearish. We did come close to this candle, this 30-minute candle, very close to it, but we didn't touch it. It missed it by a point, I think. This low was 692 and this high is 689. Yeah, just 3 points. Missed it by 3 points. That's fine. Sometimes it might miss by a couple of points. That's okay. The idea is to head to 2638 first, and then if you get through 2638, if we have a close below, a 5-minute close below 2638, we should come to 2636, right? News didn't do much. I mean, it had a small move, 50 pip move, no, not more than that. That was expected. Um, Today, what are the core retail sales is less than expected, less than forecast. less than forecast. We're probably going to come down and then go bullish later on. Yeah, this would have been a better entry. 2644.76 would have been a better entry of this candle. This was the rejection candle from that area. 264476 would have been a far better entry. You would have got about 50 pips, 63 here, and down 80. Anyway, so yeah, so this is the rejection from this demand level that I said. We are we're pushing up. We broke this, but we're pushing up from this. But that's okay. That was expected. Price to come down. Price might come back to 26426, 2642 again before heading down. We're coming down. Yep, coming down. Two six three six is my final TP. Right, that's about 70 pips, 71 pips from entry. 2636. What's the daily looking like? Yeah, we're coming to this ugly area. As I said at the beginning of the stream, this is a really ugly area. So have conservative TPs. Don't try to have a runner here because this is really ugly. See what it did for 2 weeks? It's just absolute garbage for 2 weeks. Nothing here. Just ranging between 2650 and 2633. So have very conservative TPs. So 2636 is kind of conservative because that is we should break this demand level here, 1 hour demand level. We should break it and come to this liquidity candle that we had marked, 2636, right? If you want to know how this light green area was marked, watch the beginning of the stream. There's a reason for this area. This is the push up. Yeah, this is the push up. This is the push up from that demand zone, 30-minute demand zone, or the 1 hour demand zone. This demand zone here, 30-minute drop, base rally, right? Touched it here. You can see that's the base right there. Drop, base, rally. And if you go to the 1 minute, you can see the liquidity grab liquidity, push back price back up. Okay, so let's see if you get up. I might take another entry. Yeah, let's see. Might get here as well. We might come back here. But possible that price breaks this candle high, but it shouldn't break this side. If it breaks this side, then the trade is invalid because this is the liquidity grab. This liquidity grab here should hold price to come down to 2638 and 2636. If this liquidity grab doesn't hold price down, then the sells are invalid. Then we're coming higher, right? So that's the reason the stop is just above this. This was a better entry right there. It's okay. 44.2. Yeah, should have had a pending order right there. That was a better entry than this one. 12 pips off. Drop, base, drop. Price did come. News came back. You want to see the M30 candle definitely close bearish, not bullish. If the M30 candle close bullish, then that's a rejection wick. We're pushing up. So you need to close everything at that point. If the M30 candles closes bullish before it gets up here, obviously. If the M30 candle closes somewhere here and closes a bullish doji, then you got to close everything because price can push up more and then push down, and you don't want to be holding drawdown. Um, that's the M30 candle, right? You want to see this close bearish. Bearish doji is fine, but bearish, not bullish. Because if we close bullish, that means we've formed M30 support as well, right? And that's not a good sign. That means we're pushing up first, and then we're going to probably push down later on. So, but the M15 candle would be nice to see the M15 candle close bearish as well. That means it's very likely that the next M15 candle, if this one closes bearish in the next minute, then it's very likely that the next M15 candle is possibly could close bearish. But if this closes bullish, if this M15 candle closes bullish in the next few seconds, then it's very likely that the next one also closes bullish and we break this high and go higher, right? So got to watch for that. So this high is important, the high 45.14. 45.14. That's how you manage risk, right? You don't hold drawdown. You make your losses as small as possible so that when you do take a win, it's very easy for that win to recover the loss. You could possibly do that with one win, instead of having to take 2 or 3 wins to recover one big loss, right? That's very, very crucial in trading. Okay, we closed bearish, good. Now the next M15 needs to close bearish. If the next, because this closed a doji, so if this M15 candle closes bullish, that means the M30 is closing bullish, because that's a doji, right? That's the open of the candle. So if the next one closes bullish just above here, that means we formed M30 support. And then we got to close everything. Yeah. Okay. This M5 candle needs to, this one or the next one needs to break this low. Once the next M5 candle, probably not this, but the next M5 candle, once it breaks this low, we should come down. And once we start to come down, then the M30 will close bearish. And that's a good sign. Then we should continue down. But over the last almost a month, we've not had volume in the NY with the NY open, right? That's a fact. If you check, I think up to about a month or maybe about 3 weeks or 3.5 weeks, volume has always come after the NYSE open, right? NYSE opens in about 40 minutes from now. That's when volume usually comes in. Same thing yesterday, right? If you look at yesterday, yeah. So this is when volumes came in. We just ranged. NY open, we just ranged. This is NYSE open. I think here. This is NYSE open. Volume came, push price straight down. 108, 130 pips, right? Volume came, NYSE open. Same thing. If you go back 3 weeks, right, you'll see that it happened always um, with the NYSE open. So NYSE open about another 40 minutes for NYSE open. But regardless of that, of when volume may or may not come, because we don't know that, nobody controls that. Okay, we've broken the 5-minute low, which is a good sign. We should continue down now. Regardless of the fact that when volume will come, price action is king. So, as I said, the 30-minute needs to close bearish. If the 30 minutes closes bearish, then we're coming to 2638. If this 15-minute candle closes bullish, then the 30-minute is closing bullish. That means we've formed M30 support. And that means once we form M30 support, we can easily break this candle high, this M15 candle high, and continue higher. And I don't like holding drawdown. So as soon as the M15 closes bullish, I'm closing everything. Okay, so one TP of these two entries. One is at 2638.35 and the next is at 2633. Right? That was the original idea. That's 100 pips away. We should get there. We're coming down now. This is the safer TP, 2638.35. That's safe. You should take partial positions at 2635, at 2638, 2638 or 2638.25 should take partial TP. Okay, so that's partial TP hit. The next is 2633, right? So that's great. Price did come down. We are possibly heading to 2636 next. That's great. Yeah, we're coming down to 636 next. Going to wait for the 30-minute candle to close. Not going to be anything. 8 minutes more, 30-minute candle close. We should close. The 30 minutes should close below 2638.35. Right? If it does close below 2638.35, we're heading to 2634 next. Right? At which point I might close my trade somewhere here. I don't know. I might leave it to get there. I might close it somewhere here. Let's see. Yeah, so that was a fairly easy trade. The rejection wick, that was the tell. We had done the analysis. The idea was the price is going to come down. It was very bearish. The high time frame was bearish on the 4 and the 1 hour. So we were expecting price to come down. That was the liquidity grab from this candle right here. This 30-minute candle right here. That was the liquidity grab. Price did grab liquidity on the 15-minute time frame. I'd drawn the fib. I took the entry just before news. A little late. This would have been ideal to take it there. But nevertheless, took a trade. We got about 7 minutes, 6 minutes, 6.5 minutes for the candle to close. Let's see if we touch 2634. If we do, then probably going to close maybe now. Let's see, 2634. Yeah, we're coming down. That's bearish on the 1 minute. We're coming down, 2634. So that's so far 80 pips. Let's see, we should come down to 2634 and then probably 2633. So 2633 is final TP. You should hit that. It might take a while though. It might close somewhere here, push back up to 2638 and then come down. That's fine. Let's leave that. I'm going to leave that as it is. I'm going to bring my stop loss above this 30-minute candle once it closes. Right, 5 minutes for this candle to close. Once this candle closes, I'm going to bring my stop above that. So now my risk would be then just 20 pips, right, on this trade. And I'm anticipating 100 pips on this trade. 20 to 100. So just going to wait for the 30-minute candle close in 5 minutes. Because once price has broken this liquidity candle's low, it has no reason to come back and break this candle high again. If it does, that means we're heading all the way up. 2633 is where I want to see price come to. Yeah, we're still coming down. That is forming a base for a drop. Yeah, so once I think I'll be here for another maybe 5-10 minutes. I'll wait for the 30-minute candle to close, bring the stop above here, and that'll be the end of the stream, right? TP is at 2633. Stop loss at will be above this 30-minute candle high, which is 2645, 2645.1, 1.2 something, 2645, just above this red line here, 2645.14. And TP is there, and I'm going to leave the trade, right? It should, the 30-minute candle should close to under 2638. It should close under 2630. This is 2638. We should close below this support, M30 support. That means we're going to pull back up somewhere here and then push again down. But it needs to close at 2638 or under 2638 for that to happen. Sorry. It's okay if it closes at support. That's absolutely fine. It just shouldn't close above this line, above 2638. That means it's rejecting this high liquidity candle. Now we should come down. That's a flat bottom. Yeah, we should come down. The 5-minute should create a top wick. The next one should break the high, maybe go up, create a top wick, and then come down. Yeah, there is no rejection here yet. When you see a rejection candle looks like this, that's a liquidity grab or rejection, whatever you want to call it. It grabbed liquidity from an important key level, right? So this is a key level, right? We've identified it as a key level, so it's correct. Just like we identified this as a high liquidity candle, this light green area is high liquidity candle. But you need to see a rejection like this, right? Or an engulfing candle to take the trade up. So until you see that on the 15-minute, then you're still coming down. Okay, so just a minute more for this candle to close, and we seem to be closing under 2638. Yeah, we're closing under 2638. Once you see a rejection candle, you see a liquidity grab like this, right? You see a liquidity grab like this from 2633 or this candle, then you can maybe look to take buys, but I would be careful because we are very bearish. You can see how bearish we are. We're very bearish right now, right? So I would just be careful. I would not um, try to catch this falling knife. We're very bearish, even though it's an ugly area here. I would want to see a little bit more confirmation. So, for example, what I mean by more confirmation is wait for M30 support to form, right? Now, when I was here, I didn't wait for, even though we had M30 resistance form here, I didn't wait for M30 resistance to form again because price is coming down, and we did identify the liquidity candle and price came to that, and there is a 15-minute rejection from it, and we took the trade. But when we're coming down, and even though we have a high liquidity candle here, because we're bearish, wait for M30 support to form, and then look for that rejection candle, the liquidity grab to go up, right? I hope that makes sense. 2638, we closed below 2638. Okay, so I'm anticipating price to come down to 2634 and then next 2633. Okay, so here's what I'm going to do now. As I said, stop loss is going to come here, just above that candle. 45, 14, 45. Okay, and TP is at 2633, and that'll be the end of the stream. Okay, so I hope that made sense what I said at the end. The reason I took this trade coming down is because we are bearish and because price came to a high liquidity candle, right? The candle that we had identified before the NY session, right? This candle right here. It did come to it. It missed it by a couple of points, but it did come to it, right? So I don't need to see another M30 resistance form to take the trade because there is M30 resistance already formed here. Now, since we're coming down, and even though this light green area is a high liquidity candle and we got weekly support running right through it, I'm not going to just buy the first M15 liquidity grab or rejection candle that I see. I'm going to wait for M30 support to form. That's better to wait for M30 support to form and then take the trade going up. Okay, you need a little bit more confirmation. You don't want to catch a falling knife. You want to wait for a little bit more confirmation and then take the trade going up, right? And if you do take a trade going up from inside here, stop loss would be under this light green area here, right? 2626, just under 2626. I hope that made sense. Okay, let's look at the 5-minute time frame. Yeah, we are coming down. We're just going up to grab liquidity, probably coming up here to come down again. On the 1 minute, yeah, there is no liquidity grab yet. On the 15-minute, it's nothing yet, unless this candle pushes up here and creates closes M15 bull candle, then that's a liquidity grab from this light green area, right? So you got to wait for this 15-minute candle to close before you do anything. You got to wait for this candle to close. Before, if you are in sales and before you close the trade, wait for the 15-minute candle to close. All right, that's it. See you guys tomorrow, same time, 7:30 a.m. EST, right, for prep work and analysis, and then we look for trade setups tomorrow. Tomorrow might be quiet because the latter half of the NY session is the interest rate decision and FOMC. So usually usually during the NY session, on the day of interest rates and FOMC, I mean during the first half of the NY session, price just ranges, it doesn't do anything much. So we might not be trading tomorrow. I'll be here just to post analysis, and I don't trade FOMC or the interest rate decisions because it's outside my trading hours. But if you do trade those hours, you can still use the same analysis because the zones will be valid, most likely be valid because price is going to range until then. It's going to range until then. So when I draw the zones will very likely be valid until the interest rate decision. So you can use those zones if you are trading the interest rates or trading during if those hours fall within your trading session, then you can use those same zones. It doesn't fall within my trading sessions, I mean within my trading hours, so I won't be trading that, but the zones will very likely be valid. All right, see you guys tomorrow.